Um, Mike is an awesome guy. He's one of the most quietly intelligent people that I know. His opinion matters greatly to me as a fund manager, as a Bitcoiner, as someone who's interested in Bitcoin miners. I think there's no better resource than Mike. And so, Mike, welcome to the show, brother. I'm glad you're here.
Hey, Dr. Jeff. Good to see you. We don't see you as much on X anymore.
We do not. That's because I nuked my X account back in September.
Yeah,
Hold
I
on.
remember. All of a
Yeah.
sudden, you were just missing in action, and I asked somebody what happened. He's like, I think he went full bore Noster, and I was like, okay,
Yes.
whatever he wants to do.
Right on. And I tell you, Mike, that one of the things I miss the most about doing that. So I'm really glad, no regrets that I've done that. But I do miss Twitter Spaces where me and you would get to have occasional conversations, popping up on stage and talking. I love picking your brain about macro and fund management and Bitcoin miners and all that kind of stuff. So I'm super super excited to have you here as a guest today, so we can talk about that stuff. And I also have a list of questions. I let people on Nostr know that we were going to do this show. So the live streams are usually pretty sparse as far as who pops in initially, but the shows get a lot of traction afterwards. So I'm just going to go through, talk about life, and then get to some of the questions that other people have asked, and we'll go from there. Sound good?
Sounds great.
Awesome, man. Well, so first of all, how are you personally? Like, how's life? Any exciting things happening in your life these days?
Well, I had a son about 17 days ago, and so that's a big life milestone. We had a daughter 23 months ago, so she's going to be turning 2 next month. And I started telling her that she had a little sibling coming, but we do this thing where we don't know the gender in advance. So like very old school. We have the ultrasound techs basically not tell us the gender.
Smart.
So that, like the first time we ever know is when the baby actually comes out. And so the doctor held the baby up, and I announced it was a boy. I thought I wanted a boy the first time, and I got a girl, and I love her to death, and I can't imagine having anything other than a girl. And this time around, I said, I'm not gonna like want anything to go one way or the other, and we got a boy. I think it's perfect balance now. I did want to raise a boy. I didn't want to play sports with the boy. I did not that I can't play sports with my daughter, but I wanted to have the experience of raising both. I don't know. I think you have a son and a daughter, or
Yeah, I have a
two
daughter
sons.
and two sons.
Two sons, yeah.
Yep.
So you've had that experience, and they're of course much older than mine. I'm starting a little late, but the way I view it is like I got to live a lot of life before I started to have kids. Right, like I had lived a full lifetime. I'd traveled to 50 something countries and all 50 states, and started multiple companies and played in a band and right? Ran ultra marathons and ran for 12 hours on a Saturday by myself because I was single, and did all the things I wanted to do, right? And so like it was kind of perfect. I would like to have the energy of a 25-year-old, but I don't think I would be as good of a dad at 25, right? Like
Right.
I wouldn't have as many life lessons. I wouldn't be able to be so present. I'm able to be there at the baby's crib, and the baby's bed every morning, most of the year, right? With the exception of a few trips, which I'm taking fewer and fewer. But that's kind of life. It's much more family, or it's basically just family and investing at this point.
I love it, dude. That's awesome. I'm a big fan of families, and so I love seeing your growing family, and you just growing into your dadhood. I think is just really fantastic. So that's awesome.
Thank you.
Hey, by
Yeah.
the way, that reminds me, your ultra marathons. Somebody asked a question that I wanted to make sure to ask you. Some plowboy over on Noster ask Mike, what's the furthest Mike has run without water?
I think it's right around 30 miles.
Dang.
Um, so I did a training run. This is back when I was in really good shape. I basically had 3 seasons: 2013, 2014, and 2015, where I was just in peak fitness. I think my absolute peak fitness ever was 2013 after spending a month in Jackson Hole. I climbed the Grand Teton like the second to last day, like in 4 hours, right? From Lupin Meadows,
Wow.
7,000 feet of climb, no ropes, no helmet. I just studied the route on YouTube, the Owen Spalding route, for like a few hours the night before, and just got up at 4:30 in the morning, drove to the trailhead, and did it. I started up the trail at 5 and I was at the top at 9. And so,
That's amazing.
I used to do stuff like that, like, it's funny, like you get a little older and you're a little bit less in shape and you couldn't keep up with the ghost of your old self for like 100 yards. Like if I tried to keep up with that version of myself going up the Grand tomorrow, that version of me would be so far up the mountain before I even had a chance to do the first couple switchbacks, because that version of me was absolutely like insane, right? All I was thinking about was how to be the most fit possible. And so one of those runs I did, I started in Del Mar, and I ran from Del Mar all the way up to like the northern part of Carlsbad
I
and
don't know how
back.
far that is.
It's about 15 miles, 14, 15 miles
Mm-hmm.
each direction. And it was so beautiful out. It was like perfect weather, light breeze, and I carried no water, no food. I think I was shirtless. So I used to do in my 20s, right, and even into my early to mid 30s, I used to run shirtless a lot because I thought it was kind of a cool thing to do when you're
Yeah.
like out running for 20 or 30 miles and you just go as lightweight as possible, especially in the mountains. And so, yeah, I used to do stuff like that. Nowadays, I'm just trying to do 5 to 10 miles every day or almost every day. And I think, I think it's helpful to have a sport that you can still do as you get older. I see a lot of guys my age, they have a couple kids, they start to get fat, especially if they're working too much and traveling and, drinking and caffeine, and like they're just sleep schedules are off. And the one thing that's like a centering force for me is just I get out, I put on my shorts and my shoes, and I just go run every day. And I got trails right here behind my house, which is great. They're beautiful trails, right, with like mountain views and different directions and stuff, but they're very lightly used, especially during the week. So I can be out there for hours by myself, and I find that's actually really helpful for investing as well.
That's awesome. Well, so helpful for investing. So let's get into that. Let's talk right now about what's your kind of like your macro outlook. Where do you think we are right now? How are you feeling? Are you nervous? Do you think we're about to crash? Do you think we're at the cusp of a raging bull market? Where are you right now? Where's your head?
I think we're mid-cycle. I think we're somewhere between the third and sixth inning of the Bitcoin and liquidity cycle. I think in the very short term, like there was a lot of expectations around what Trump was going to be able to do in day one. People always have irrational expectations about what politicians can get done, and I think Trump maybe was a little less sincere than people thought about what he was going to do for Bitcoin, and maybe more sincere about how he was going to make money off crypto, which is par for the course. I voted for him, but I understand that he's deeply self-interested, and that's kind of a big part of his personality. And so the combination of the tariff saber rattling with the Doge kind of efficiency push, I think, is creating a disinflationary impulse in the market and creating a bit of a risk off mentality in the very short term, right? The dollar has been it did DXY did top out right around 110. It looked like it
Mhm.
was coming lower, and then it firmed up again, right, this week, right at the same time we had this kind of big sell off in the crypto complex. So to me, this is mostly noise, right? Because I think if you look out 6, 12, 18 months, I think we're just in an elongated cycle. And I think what's confusing people is we have institutional components that we didn't have in previous cycles, right? So like people think that this drawdown from 109 on Bitcoin to 78 something, right, is significant, when in fact it's far lower than the typical drawdown you would see in a single year during the peak of a previous bull market like 2017 or 2021. And a lot of that is like we have these inflows now that are very much like what you see in traditional equity markets with index funds. You have these inflows from ETFs, you have these inflows from large corporations like MicroStrategy, and then you have all the copycat companies now, and you have miners who are basically trying to emulate, Michael Saylor, which we can get into why I don't think that's necessarily the right strategy for those companies in particular. It is what they're doing, and so it's created this like volatility compression regime in Bitcoin that I think is actually healthy, that we're seeing some sort of drawdown now. I mean, look, I think anybody who's super long and has a lot of money in Bitcoin would prefer for it to just march straight up to 150 or 180 without pullbacks. But that's not how healthy bull markets work. You will have these types of moments during any bull market, and I don't think it's over. Right? I think the preponderance of evidence, maybe 80, 90% odds that this is just a run of the mill truncated drawdown, right? Because if we do only stop at 75 or 78, that's not significant relative to previous bull cycles, but as I said, we also have the support from these new institutional factors that we haven't seen before. So I'm largely still bullish. I'm looking for true exuberance. So my like primary heuristic and primary benchmark for when to become more conservative and when to become more cautious and de-risk and sell calls instead of buying them, right? Doing some more market neutral hedging, et cetera, is when I see actual exuberance in the market. You don't make long term tops in markets when everybody's afraid. When the bull bear index, right, the fear and greed index is at 10%. When the RSI is going through the floor, like those are not long term tops. Those are typically within months, especially in Bitcoin and crypto, within months buying opportunities. I suspect that March will be a much better month. I suspect sometime between March, April, May we'll make new all-time highs. And you know how sentiment is. When you blink in this space, people go from, oh, it's so depressed. I can't believe I didn't sell some Bitcoin at 105 and we're at 79 and my wife's going to hate me and all this stuff, to we're back at 110 in a month or two. And it's like everyone forgot and now they just wish that they had more Bitcoin again.
Right.
And so that's kind of how I view it. I take a longer duration view. I'm very lucky because I'm largely just managing my own money, right? So I don't have the outside constraints that most investors have of like people bothering them every time there's a drawdown. Like we need to have a call to talk about what's going on in the market because it forces an investment manager to think and make decisions that are not necessarily optimal, right? And since I largely am immune to those forces, I can step back and just look at it in a longer duration. And that's how I've managed to hold Bitcoin for 7 years, right? Without selling it. Most of my position was acquired in December of 2018, my current position in Bitcoin. And the last, major drawdown in 2022 largely didn't affect me. And I think part of that too, and I think we've talked about this in spaces before, I run a much more diversified portfolio, right? So like I own a bunch of value names. We've been talking about value names for 5, 6,
Mm-hmm.
7 years, but like I bought Philip Morris at 90, right? It's whatever at 150 now. So that's been a great run in a year, right? I've been buying Anheuser-Busch. I started talking about that a couple months ago in X, and it bottom started to go higher. The stock is just too cheap, right? I've been buying Diageo recently. I think Diageo is also too cheap. Those are two of the best consumer staples names in the world, and they're trading at basically multi-decade low multiples when you look forward a year and you look for kind of 4 to 8% EBITDA growth. So I'm still like deep into that kind of stuff, and so I'm receiving the dividends from that, and then I got my entire private book too, right? So I recapped a bakery. We talked about this in Spaces a long time ago, but recapped a bakery 10 years ago now. I became chairman of the board 4 years ago, and last year we returned in one single year like 70% of all the capital we put in 10 years
Hmm.
ago. So we're basically running at a 70% yield on cost. Like if you think about it in equity terms, like people have owned Coca-Cola for 30 years talk about it in those terms, right? Because like
Right.
the dividend's gone up a lot and their original cost base is so low that like the dividend they're getting every year, it says 3% on the screen if you buy the stock today, but their effective dividend is 60% or whatever. We're going to return closer to like 80% this year, right? So
Wow.
we just finalized our capital return program for this year. Again, I'm leading that for the board. And then next year, our forecast, because we have a huge reduction in CapEx that we need in our San Diego plant for that company, we think we can do 3.5 to 4 million of distributions, which is effectively more than the entire original investment because it was a recap 10 years ago. It was a company that was failing where we were effectively buying the whole business for less than the salvage value of the baking equipment and the real estate, right? So it's a turnaround value, private, where I'm engaged working with the CEO, and that business alone is going to return, 100% of our original capital in a single year next year. We still own the building in Chicago, free and clear, which is worth probably 50% more than the original capital, and the business itself is now worth probably 10x what we paid for it, right? So it's look, I only bring that up in the context of a lot of people get too emotional about the short-term cycles because they're too all in on like one idea and their entire life is predicated on that one idea working or that one asset class being good or bad or whatever. And I think if you have diversification, like you have fiat businesses that spit out cash flow, if you have private businesses, if you have real estate, if you have value stocks, you pair that with Bitcoin in the right mix, it allows you to effectively ignore the volatility in the macro, right, in the short term, and then ignore the volatility in crypto in the short term. And that's what I try to do. Of course, on X, I participate in the pie throwing and the trolling and the making fun of people and like making fun of myself and shit posting, etc., because it's fun and I enjoy it and I wouldn't do it if otherwise. But the reality of like how I'm operating like a private equity hedge fund, operator who is interested in diversification and downside protection, right? And Bitcoin is just a part of that strategy. It's probably the most important part of my long-term wealth building strategy, but it's not the only part.
Man, that's awesome. And there's a lot of stuff in there. And we could go in so many different directions. Regarding your macro, I got to say that I have basically the exact same outlook as you do. I think that all this recent pullback was, as far as I'm concerned, are the delayed effects of the super strong dollar that we had back in the fourth quarter that had negative effects on global M2. There's usually about a 7 to 15 week delay on the effects of Bitcoin, at least initially. And so I think this pullback, I had a tweet, or not a tweet, I had a post on Noster from mid-December where I was predicting that we'd have the highs of about 105 to 120 kind of towards the end of the year, and then a pullback to somewhere between 75 to 85,000 for Bitcoin, just based on the dollar strength. So this is to
Nailed it.
me just run of the
Nailed
mill,
it.
as you said. It's nothing worrisome. It's a great place to reload for people if they needed to, add to their positions. Yeah, I did. We did a podcast with Hodl and a dude Fish Bernoulli a couple days ago, and we just kind of went over the same stuff too. I think it's a fantastic buying opportunity, and I agree with you. I think we're kind of middle innings of this bull market, and I think the exciting part is still coming. So love it, and I'd love to get into these value investments. And I love that story, man, about how did you get into that? The bakery and
Mm-hmm.
the equipment. Like, how in the world did you get introduced to that to start with?
I got lucky, right? Because I
Oh,
joined
hey, real
YP.
quick, let me
Yeah.
interrupt real quick. People are saying your microphone is kind of quiet. Are you able to turn up your volume?
Do you think it's just because I'm too far away from it?
Maybe.
Let me
I mean, I can hear you, but you're a little bit quiet compared to
let
me.
me
So,
let me see if. How about this?
yes,
This should be louder. Yeah.
that works. Yeah, yeah. Okay, so the bakery store.
Yeah. So I was running a company called Brightscope, which some people may remember. It was a company that gathered data on retirement plans and financial advisors in the U.S. And our biggest customers were like all the big asset managers, BlackRock and T Rowe and PIMCO and Fidelity and Merrill, et cetera. Like you just go down the list. Like everybody used that product to run their retirement business. The company got big enough that I was able to join YPO, which I don't know how familiar you are with YPO, but like
Yep.
there are a number of business organizations. Vistage is one of them that CEOs and presidents often join. YPO is kind of the more advanced, higher level version. Like they really curate the members. Like I think there were 60 members in the chapter, and like 15 or 18 of them in my chapter were public CEOs, and like 5 of them were over 10 billion market cap. So when I got into my chapter in San Diego, I came in at a great time because I was like 29, 30 at this part of my business career, and I was sitting on a canoe in Panama with like 2 public company CEOs in front of me and 2 behind me for 3 hours while we paddled down a river. And so they were just like, "So Mike, tell us more about like what you're doing and like what are you working on or what are you thinking about?" And they're like, "Have you thought about this? Have you thought about that?" And it's amazing when you spend time around people who've done a lot of stuff right at scale. It makes you realize that you're not far from being able to do that yourself. And in fact, like just being in that sort of presence really helped accelerate my career, not only as an operator but as an investor. So what ended up happening, and I haven't really told this story to too many people, is in each YPO chapter you have a forum, right, which is a smaller group of guys, like 6, 7, 8 guys that you get to know really well. You do like a retreat with them every year. We went to like Russia and China and Israel. Like we did some amazing trips, always highly curated, right? Like when we went to Israel, we were like meeting with the deputy defense minister
Hmm.
in their version of like the Pentagon, right? And
Yeah.
like getting a security briefing live. And we had dinner with the general who runs cybersecurity for all of Israel. And we took a helicopter to Mount Hermon and monitored Syrian rebel communications on headphones. Like we were doing this crazy type of stuff, like a type of trip you can't do unless you donate a lot of money, which one of our guys in our group had. And so he had the ear of the national director for the Friends of the IDF, right? So we got the full tour of Israel, stuff you can't do, including a Sayeret Matkal training exercise, like one of those live hostage rescue where they blow out the doors and the guys run in and they go through each room and clear each room and take out the hostages and take out the terrorists and rescue the hostages. We were standing up above and watching the training exercise
Wow.
live, where we knew where the terrorists were and where the hostages were, and they didn't, and we watched how they worked each room. Like it was
That's
incredible.
incredible. Yeah.
So that's kind of organization it is. Very high level. Very it's like I think of it like a fraternity for CEOs, right? Like where once you get in, you're part of the family, and people will lean in and help you with anything. So what happened is we were sitting in a forum meeting, and you're not supposed to do this, but this is kind of what happened. And one of the guys in there was the president. He was number two in a company that was really having a lot of challenges. And we looked at it and as a group, and at some point we all looked at each other and said, are we just going to like passively provide our feedback and our views, or are we just going to go activist and help this guy take over the company, right? And toss the CEO who'd run into the ground and repay the debt, and get it on better footing, take over the board, et cetera. That's what we did. We bought majority control. We had a lot of debate about whether we should do that, but the opportunity just looked so clear, right? We were buying for a really small amount of money a bunch of locations that were operational. We were buying a geographic footprint that was basically national. It was a business that had gone from 80 million in revenue to like 25 or 27, right? And the CEO hadn't right sized the cost base. So when you lose McDonald's and Starbucks, which by the way happens to everyone, like they get Starbucks or McDonald's or Walmart or somebody big like that as a customer, they think it's going to make their business. Those companies tend to break small suppliers, right? Because
Mm-hmm.
they squeeze your margins. When they pull the business, you did all this capex and upgrades to your facilities to serve them, and then they just cut it. So that happened to them, and that's largely what kind of drove the business to the ground. So they had to completely remake the business, right? They had to rethink the cost. They had to rethink the locations. One of the things I pushed for was getting rid of our internal Chicago operation. So what we did is we actually sort of took our operation out of Chicago, moved a lot of the bake equipment to Dallas, and then we brought in a tenant there who took over some of the existing business. That changed the entire. It flipped our EBITDA quite substantially because we went. That was the one location where we were losing money, and now it's generating like a significant amount of cash flow from just the real estate side. And now the mortgage is paid off as well, so it spits off cash flow. And then we have a billboard on that property along the freeway, about 15 minutes outside of Chicago. That's also separate, but also going to be generating a significant amount of income. I had no idea how much income these billboards generate. So it was a classic Graham Dodd, like, but private value investment where we just did a sum of the parts. You looked at the asset base, and we were buying like $1 for 30 cents. And it turns out it was ended up being a lot more than that because the value of the real estate went up a lot more than we expected over the last 10 years. I mean, there was a building in San Diego that we probably thought was worth 7 or 8 million when we bought the business, right? And the company owned 10 or 15% of that building. So we didn't own 100% like Chicago. We owned a portion of it. That building ended up selling for like 12.
Hmm.
And so like little things like that, where we thought maybe we were going to get 7 or 800K. Instead we had 1.2, and the building in Chicago was probably worth 2 or 3 when we bought it. Now it's worth 5.5 or 6. That's the magic of compounding, right? It's the magic of asset markets just going up. If you buy a pool of assets that have potential value, including real estate, and you buy them at the right price, then it's really hard to lose money. And if you actually do a good job turning the business around, as the CEO has, then you have real upside as well. So I think like cash on cash, it'll end up being, I don't know, a 10 to 30x all in type of return when all is said and done, and in about call it 10 to 11 to 12 years. It underperformed Bitcoin, right? So like, not going to deny that. If I'd put all the capital I put into the bakery 10 years ago into Bitcoin, I'd have more. But what we did outperformed the S&P substantially, and almost every other investment you could have made. It also has the advantage of spitting out cash flow now. It's basically like we're on a 9 out of 12-month distribution cadence now. So like every more than every 2 months, right? Like, so like every month and a half, every 6 weeks or so, there's a large cash distribution. And so would I preferred, like knowing what I know now, to be all in on Bitcoin with that capital? Sure. Would I have slept better at night? Probably not. And at the end of the day, like if you're wealthy either way, I think sometimes it's good to remove some of the volatility from that journey so that you don't ever get emotional enough that you make bad decisions. Because it's not getting it perfectly right technically that matters. It's mostly controlling emotions and making sure that you don't make the wrong decision at the wrong time, right? Like a really detrimental decision, like I've seen people make, where they sell all their Bitcoin on a small drop and then it recovers, and then instead of chasing and trying to get back in, they just never get back in, and then they hate Bitcoin for 7 years because
Right.
they never bought it back when it went to 3 in 2018. And so I try to resist that via doing these types of investments where, hey, when Bitcoin's down 10% in a day and the miners are getting hosed, you know what I do? I don't like sit and look at the screen. First I go for a run, and then I call the CEO of the bakery and ask how I can help. Right. And then I call the CEO of one of the other companies that I'm on the board of, and I say, hey, how can I help you today? I want to check in. Right. And so by having this like oscillation capability between public and private, you're not so like hostage to the short-term movements in asset markets that someone who's like 100% all in liquid assets, and including Bitcoin, right? As
Right.
much as as much as I think being 100% Bitcoin may work for some people over the next 10 years, there are very few people that are actually psychologically wired to be able to do that. And if you are 100% Bitcoin, you don't have another source of income, you will have to either borrow against it, which is fraught with risk. You saw people last cycle use BlockFi and Celsius and Voyager and FTX and all these companies to do various things. And so they thought it was going to be easy. I'm just going to take this beautiful, pristine asset I have and I'm going to generate income off of it. And that didn't work out. Or you have to sell it, which requires you to either have like a very disciplined selling program or to like be a trader and try to figure out when to sell so that you maximize the yield on the Bitcoin. I prefer to just hold a set amount of Bitcoin for 20 years and build fiat businesses that generate cash flow. And I know that like pissed off a lot of maxis on Spaces, and I largely got kicked out of the kind of cult part of Bitcoin 4 years ago, and because of that. But like candidly, I just don't care, right? Because my investment strategy doesn't. It's not predicated on needing anyone to like me. It's not predicated on needing everyone to think it's smart. But it works for me. It works for my family, and so far so good, right?
That's awesome. I love it. Great story, man. Buffett would be proud of your story. That's really fantastic. Let's segue into this because a lot of people know that you know what you're talking about when it comes to Bitcoin miners. Like I told people on Noster, like you're my go-to resource. If I have a serious question about miners, I'm going to come to you and ask for your input. And so I don't want to dox you unless you want to dox yourself, but like how involved are you with public miners, if any? And then just give me a general overview of what you think. I know obviously anyone who's been paying attention, February has been rough, right? Miners have been getting just hammered. Bitcoin's been getting hammered. Anything Bitcoin related has been getting hammered.
MicroStrategy's been hammered since the week before Thanksgiving. I was
Right.
selling, I was selling some pre-market at 535 the week before Thanksgiving. That Thursday, I was in Ojai, at the Ojai Inn, which is like this beautiful place kind of in the mountains above Oxnard and Ventura. And I woke up that morning and I looked at the market, and I had just done a space the night before, and I said, I think MicroStrategy is a little bit hot. And I tend, when I see this level of exuberance, it almost always retraces. And it was an unpopular thing to say, but in retrospect, it was a really good time to be
Mm-hmm.
trimming. Now I trimmed the whole way up from 195 up to 535, and a lot of my trims were like between 400 and 500. But that last one at 535, I'm actually pretty proud of, because that was the hardest one to do, because it looked like it was going to go to infinity that same
Right.
day.
Right.
So anyway, yeah, like everything's down, especially since last Friday. It was midday last Friday, right, where everything turned from positive to negative, and then it's just dumped. Since then, I had a couple of stocks that were up 25, 30%, who went from up 30% year to date to down 20% in like 4 or 5 sessions, without any like super important long-term fundamental catalysts. So in my opinion, that's probably not material when I look out 6 months, but that kind of stuff happens a lot. But to answer your question, you want me to just jump into the,
Just go for it. Give us your
yeah.
spiel.
So I'm on the board of Iron. As you know, I've been on the board since the month before the IPO, way back in 2021. So kind of a wild ride, because we were the last company to get out, and we went out with the traditional IPO with JP Morgan. I think they raised 230 million or something like that. And even up until the day we launched, that JP Morgan was trying to convince us to lower the price from 28 to 26. And I was one of the people on the board who pushed back strongly on that, because my view is it's pretty binary. Like if we get out, it's not going to matter whether it's 26 or 28. But if we don't get out, right, like that's not good. I don't think the price is going to matter. And we did in fact get out. Other companies like Rhodium, who were right behind us, did not get out, and they ended up going bankrupt, right? So I think like in retrospect, it was good timing. It was right at the tail end of the bull market, which topped out in November of 21. And so, of course, what did the stock do? Like it opened, it fell, and it fell, and it fell, and it fell all the way through 2022 to the bottom, like in December of 22, went from 28 to 1, right? And around $1, I went to the board at Iron. I said, look, like I want to buy 3 to 5 million shares now. And they were surprised by that because like very few people were interested in buying the stock in December of 2022, right? It was a rough time. The market was, but I saw so much value in what the company was developing at that time. And so by the time we figured it out, I was only able to buy like closer to 750K shares at 3 because we had an open ELOC, right, which is like an ATM. And since the company was issuing shares in the market, it prohibits the directors because we're interested parties, right? It prohibits us from trading the stock. So I have never been able to trade a single share of Iron in the public market, in the lit market by myself. So I've never placed a single buy or sell order, right? Like unfortunately, I wish I could have because I would have made a lot more money if I could have just made those purchases myself at $1 in December of 2022. But the upside has been that I've gotten to work with the team and really help them make really pristine, good strategic decisions, building on the work that they had already done. These guys are heavy duty infrastructure guys, right? Their whole thesis is around the disconnect between the physical world and the digital world, and that the physical world won't be able to keep up with the exponential growth in the digital world, in particular with things like Bitcoin AI. They were talking about AI 5 years ago, right? So like there are a lot of companies that recently pivoted into doing more AI. Iron's been building facilities for 4 or 5 years now with the idea that AI was always going to be part of the equation. And really what you're doing is building high quality, scalable infrastructure with access to large amounts of power, which allows you to provide compute to essentially any industry where there's significant profits to be made. And so when I think about it at a high level, like mining is a really important part of what makes Bitcoin unique versus any other crypto. So for all the maxis out there who are like, Bitcoin's better than Ethereum, like I wholeheartedly agree. But the reason is because it's tied to the physical world power and infrastructure that those other proof of stake coins don't have, right? It makes it harder to hack. It makes it harder to control it. It keeps it decentralized, right? It's a huge supercomputer. And a lot of that's driven off of these industrial scale miners. And so what you want every cycle is for at least 6 to 12 months for mining to be really profitable. Because if it isn't, then there's no security incentive for someone to provide the compute to the network. And so what I struggle to understand is this view that like Bitcoin's wonderful, but miners suck. And it's like, well, Bitcoin's wonderful in part because miners are incentivized to exist. If for some long period of time every miner was failing, well, then Bitcoin would largely be failing. Like a lot of its vitality is predicated, its scalability is predicated on an increasing hash rate over time, because you wouldn't want to store 20 or 50 trillion dollars of the world's wealth anywhere without significant defense. And that defense comes mostly in the form of a rising hash rate over time, right? I know there's other mechanics there as well. So I view it as a fundamental part of the ecosystem. Yes, like I'm incentivized. I get some RSUs, right? I get some board comp for serving. I do enjoy the experience of helping the team there. But my fundamental interest is seeing these companies be successful so that Bitcoin can scale over the next couple of decades. In terms of like how I view them as an investment, right? Like it's a really hard space. Most of the companies are going to fall behind across multiple cycles. They're either going to not build efficiently. They're not going to be able to operate their machines at scale. They're going to fail to secure the right infrastructure. They're going to take on too much debt late in the cycle. But the reason why I like them, the best kind of 2 or 3 right now, better than MicroStrategy, is that I think as you get to a high enough Bitcoin price where these companies become really profitable, there is a huge advantage to be able to mint new Bitcoin at say 20, 30, 40K all in versus having to use capital markets to buy it at 150 or 200. If we end up getting to those prices, I'm very confident a company like Iron or Cypher or CleanSpark from here, especially from here, will outperform MicroStrategy, even if MicroStrategy outperformed them dramatically in 2024. And keep in mind, they're oscillating right now. So the miners outperformed MicroStrategy significantly in 2023, right? So Cypher, Iron, Mara, they're all up 5, 6, 700% in 23, and MicroStrategy was only up like 200%. And it was dead for most of the year, and then it kind of woke up at the end of the year. Last year, MicroStrategy smoked the miners, right? With a few exceptions, right? Core's had a good year, TeraWolf had a good year, etc.
Mm-hmm.
I think now the only question is from here to the end of the cycle, from these prices, what happens? Do we see a reversion to the mean at higher Bitcoin prices, where you do get the convexity and the operating leverage from the miners that yields a higher return, or does just a pure levered capital markets play outperform? And so, for my personal money, like I want to own all of them, and this has been my argument from the absolute bottom. I want to own MicroStrategy, I want to own Coinbase, I want to own Cipher, Iron, CleanSpark, etc. But if I had to put everything into one thing, one idea, I would still stick with mining here, in spite of how negative the sentiment and how poor the performance was over the last 12 months. And so, again, that's just my view. We'll see if it's right or wrong. A lot of it's predicated on Bitcoin. I think if Bitcoin goes high enough, there's going to be a window in there where the miners significantly outperform, simply because their model benefits more when the spread between the cost to mine and the current price gets wide, right? So like even at 60 or 80K, there wasn't enough spread. Like Marathon is mining at break even effectively, right? And they're using
Mm-hmm.
the ATM to subsidize buying Bitcoin and doing convertible notes and stuff, right? Like MicroStrategy. But at 150 or 200K, you have some miners like Iron that are literally going to be mining all in at like 30K. And so at 180K, right, like your margins there are huge. Your gross margins are huge, and your EBITDA margins should be like 50, 60% at scale. Keeping in mind also that it's getting harder and harder to scale because a lot of the power that you need to get as big as an Iron is now being sucked away to AI, because you have this conflicting use case. So the one thing you're hearing over and over again in the market is that there's not enough power, right? There's not,
Mm-hmm.
Sam Altman saying there's not enough GPUs, but what he's really saying is there's not enough places to plug them in.
Right.
Like they can ship, NVIDIA can ship you Blackwells right now. There's not enough liquid cool data center capacity. So you've got a bunch of people that are going to be sitting on chips, can't plug them in. Meanwhile, ChatGPT, Claude, Grok, everyone's going to be upgrading their models and getting bigger and bigger and bigger. And consumers are going to be using those things heavier and heavier. And a lot of the power that is out there for 25 and 26 is already spoken for. It's already owned or controlled by someone like an Iron or a Cipher. So I just think people have missed that. Like at some point, I think that'll get priced in more. It seemed like it was happening a couple times over the last year, but then quickly sold off. I think there's a lot of hedging going on. There are a lot of hedge funds, quants, market makers that are doing these kind of pair trades where they're short MicroStrategy long Bitcoin, or short the miners long MicroStrategy, or short the miners long Bitcoin. And you can see that a lot because there were just moments where the trading doesn't seem like super rational. So we'll see what happens going forward. But my thesis is that these companies have a significant run ahead of them over the next year.
Yeah, I agree with you. Hey, so and I love having you on here to describe this. I know that there's sort of a contrast which you sort of brought up between different miners. Like, do you stay 100% all in on just Bitcoin mining, or do you sort of diversify and become more of energy producers plus Bitcoin miners, which is kind of what Iron has been doing, right? Like focusing more on these energy sources. And so can you describe that a little bit more? Like, what is how do they decide? How
Yeah,
does Iron decide when to mine Bitcoin and when to sell basically their access to energy to big data companies? Can you get into that a little bit more?
yeah. So it's interesting, right? Because they acquired a bunch of large scale power and interconnect agreements earlier than most people, and they went bigger, right? So like their biggest site is single site is like 1.4 gigawatts. Like there's probably not a larger single developable site with power in the next 24 months anywhere in the U.S. Right? There may be a handful. There are sites that are going to come online in 28, 29, 30, but like that's pretty far out. And if you're a hyperscaler and you're trying to you're trying to stay relevant and you don't want your existing products to be cannibalized by AI, you need to get online. You need to get more capacity online quicker. So, like, what's the formula? There's no right or wrong way because we've never seen this type of power squeeze at this scale before. We've never seen these converging exponential technologies, digital technologies converging on the power grid to the same degree. And so when we look at it, we go, okay, like what are the economics today? What are the pluses, minuses? What are the constraints? And one of the biggest issues, like with doing the AI path, is that you have an actual customer. So you have an actual counterparty. Whereas when you're providing the compute to Bitcoin, like you can do it in a permissionless basis, right? So one way to think about it is that Bitcoin is this always available permissionless offtake for these large scale energy sources. So like when no one else wants to monetize the energy in West Texas, a Bitcoin miner can monetize it successfully because it's effectively free like 95% of the time. And then like a few percent of the time during the year in the summer when the air conditioners are running or in the winter where there's a huge storm, prices spike, you can curtail. It's a beautiful load on the network, right? Because it's super stable, long term. It's super predictable, and it's 100% curtailable, and it's not tied to any location, right? So like mining has a huge advantage on that, and it doesn't need 100% uptime, right? Because it's a probabilistic, mining algorithm such that like you could stop your machines from running at minute 3 of a block and turn them back on at minute 7, and it didn't like demonstrably change your long-term expectation, right? And which is important. And so if you use that as your base load, like your offtake for everything you do, then the only question is like where are you getting enough value above and beyond that to justify transitioning to AI? Now, so what are the benefits of AI? Right? Dollar denominated, so you're not hostage to the swings that you get in Bitcoin. That's one of the big downsides of Bitcoin mining. Like the underlying commodity drives your profitability. That underlying commodity is outside of your control and completely unpredictable. Compare that with AI. You sign like a 10, 15, 20-year potential contract where there's escalators and you can see the revenue and the EBITDA as far as the eye can see. And some of the capex sometimes gets funded by those large scale parties who want to do it. So the upside is clear. The downside is that you now sold away capacity that you won't get back for 10, 15, 20 years. And there'll be periods of time within that 10, 15, 20-year period where Bitcoin mining profitability far outstrips AI. So the way I'm viewing it now is that what you want to be able to do to the extent possible is to be able to oscillate between them by always having some sites with capacity for both, such that like you have the mining ASICs are much cheaper, right? They're still expensive, but they're much cheaper than the GPUs. So you always have some like base level of mining running no matter what, right? Because you don't want to give that up. Because if AI demand turns down or your counterparty doesn't pay or like, because at some point that's going to happen, just like we saw with the dot-com bust, like there's a lot of exuberance and then there's going to be a fall off and then there's going to be like this period of despair and then it'll come roaring back and AI will be much bigger in 20 years, right? But there may be two of those over the next 2 decades. And during that time, maybe that's a great time to be mining Bitcoin. So what I like to see in the companies is the flexibility, the ability to do both. If you can do both in the same facility or the same site, I think that's awesome. Not everyone will be able to do that, but Iron's already doing that in Canada. They have literally like in the same building, the same data center, they have like GPUs on this side and ASICs on this side, which is I think a model for kind of where you could go. Some people argue, well, you shouldn't be able to do that because like you need different cooling requirements and different redundancy and et cetera for data centers on the AI side. But what we're seeing is a change in perspective, right? And a change in perception amongst those larger players where they thought 2 or 3 years ago it had to be a tier one data center with certain, types of characteristics. And now people are realizing, well, actually for most of what we're doing in terms of training models, we don't actually need all those things. And so we can have something that's a lot cheaper, that's 99.9% of what that other thing is, but is missing that last 0.1%, but it's like 50% cheaper. I'm just throwing out numbers here, but it gives you an idea of like how these guys are thinking about it. And as that happens, it creates more opportunity for the so-called Bitcoin miners to move into that space because they can more quickly retrofit to serve those needs if they don't have to spend the extra, millions of dollars per megawatt to do everything that you would do with that like very top tier data center. And you wouldn't want to run your lifetime like most important consumer facing model in certain facilities, but you don't do everything at that level, right? A lot of what you're doing is training the models, right? A lot of what you're doing is before you get to like the polished end user experience, and a lot of that stuff can be done in data centers that don't look like the tier ones.
Nice. Thanks for the comprehensive answer. I appreciate it. I appreciate your expertise. You know things that are going on that most of us, regular plebs don't have any idea what goes on behind the scenes. I wanted to get to some questions. I want to work hard to keep this under an hour to respect your time. I like to, not go on too long. So we have about 15 minutes. I want to go over a bunch of questions that people have for you, if
Sure.
that's okay. So I'll just kind of go through and pick up some of the questions that I see, and we'll see what you have to say. So Cincy asked yesterday on Noster, to me, mining centralization is one of the biggest threats to the Bitcoin network. Does Mike agree? And what does he think of the BitX solo mining movement? Could this actually help? What other solutions are there? What do you think?
Look, I'm sympathetic to the concern because we don't want Bitcoin to become like some of these other cryptocurrencies or be sort of taken over by anybody trying to control it. I totally am sympathetic to it. I personally don't see it at this point, right? Like some people will say it's centralized at the mining pool, but the reality is like the mining pool only controls your hash rate in the block that you decide to direct it there, right? So as Aaron likes to say, like if our mining pool did something we didn't like, we would just pull our hash rate like the very next block, right?
Mm-hmm.
So I think some of it is a bit overblown. I'm not going to say it's nothing. It's something we should monitor, but I personally like I'm not worried about it. It's part of the reason why I invest in the space. Like, look, I know we would never do anything right at Iron. Our board like cares about the vitality of the Bitcoin network, cares about the sector, cares about keeping Bitcoin healthy for the long run. That's part of why the companies even in the sector and in talking with the management teams of a lot of the other companies, like they're in it for the same reason. So the idea that there's going to be this kind of mass collusion to hurt Bitcoin in any way, I think it is extremely unlikely. And it's less likely when you have people like me that are in a governance position because I would never go along with that. You'd have to fire me and remove me. And if that happened, I would, for that reason, I think people should be concerned. But if I end up leaving the board, it won't be because the company is trying to centralize mining and control the network. Like that won't be the reason, right? I'm pretty confident about that. So anyway, that's kind of my view. That's that at a high level. Obviously, there's some technical nuance that some people want to get into, but I try to look at it from 30,000 feet and say like, is that something that I'm really worried about? No. Am I worried about quantum computing? Maybe a little bit more than I am about mining centralization, right? Like I think it's a potentially real threat that some people might be discounting too much, but I also think that it's possible to upgrade the protocol so that it's more quantum resistant than it is
Right,
today.
right. I agree. I agree. What and the second part of his question was like, what do you think? Do you have an opinion on solo miners? Do you solo mine, and do you have an opinion on solo miners?
I mean, I just think it's going to be really hard. It's like a lottery ticket now. Um, Solo, like running your own miner and then eventually, like I assume directing it at a pool. A lot of these guys aren't right. They're just hoping to like with one miner win a
Yep.
block, and like you see how frequently it happens now. It's like every 3, 6, 9 months, like there's an article, solo miner wins a block. It's just that hard, right? Like it's interesting, it's cool. There'll always be hobbyist miners, hopefully, right? But I think a lot of the hash rate, because just to be economic, right? It's a brutally hard difficulty algorithm, right? The protocol is insanely brutal, which is why very few miners last multiple cycles and why a lot of them blow up, which is healthy in a sense, right? Like it clears out the deadwood and there's no like outside intervention in that process. It's just the free market. Like if people want to deploy capital here, they can deploy capital. If they lose money, they lose money. No one, the Fed's not going to bail them out. And as I said earlier, like you do want, as a long-term Bitcoin holder, you do want mining to be profitable enough for somebody to make money. I just struggle to see at the scale of 850 exahash going to like way more than that, probably doubling or tripling over the next 4, 5, 6 years. How are you going to be competitive unless you're doubling or tripling your capacity? Like how are you going to make sure you're going to make money? So if you just want to run one miner and it's effectively like it's like a really out of the money call option that has like almost a zero chance of paying, but if it pays, like it pays really well, right? And so should people do that? I don't know. I personally am just helping the mega scale miners try to survive, right? It's not that they're going to get so big they're going to take over the network or collude. It's literally like which ones are going to survive several cycles because it's the down cycle is so hard.
Right. It's a dog eat dog world. I tell people all the time. It's such a competitive business, and you can be on top of the world one cycle and fall behind the next cycle, or you can play the bear market wrong, or play the bull market wrong, or use
Yep.
leverage at the wrong point. There's so many ways that it can go wrong that it's very difficult. So
Which
if
is
you
why
want,
most people shouldn't invest in mining at all, right? Which I say, I say it, but people never remember me saying it. They only remember that I like miners. And of course, like I am involved in the industry. I do enjoy working in the space. I do enjoy investing in the space, but I always caveat it with like, look, if you're not sophisticated, if you don't know what you're doing, you should stay away because a lot of people lose money in mining, including sophisticated investors.
yep,
They lose money speculating on the public stocks, and they lose money buying into private miners, which is something that I've warned about for a long time. Like almost no private miners are going to be able to survive in the long run because they don't have access to capital during the down cycle. We saw that this cycle where like the Clean Sparks and the Irons and the Maras and the Riots were able to continue to invest in the business all the way through the down cycle because they have access to the public markets. And the public miners who thought, oh, we're going to be fine, like they couldn't get any money and their share of the global hash rate has dropped
hmm
precipitously, and a bunch of them have gone out of business or been acquired. So look, it's a tough game. If you're one of the winners, which I think Iron will be, your returns could exceed what most people expect by a significant margin. But you're taking a significant amount of risk as well to get there because there's no guarantees that the business plan will work.
yeah,
I think it'll
great.
work, but there's no guarantee.
Right, right. No, I'm totally with you on all that. And I just wanted, this is a segue question, but Hendrik asked over on YouTube, question from a small business owner: are we getting to the point where the mining tech? Oh, it just went out. Are we getting to the point where the mining tech is so expensive that using miners to, let's say, replace your electrical heat fans will be untenable? Um,
I don't.
my yeah,
I don't have any insight on into that level. Yeah, I don't.
it's very
I don't know.
granular.
Yeah.
It really, Hendrik, just depends on. I mean, it's very different for every individual. I think a big reason why it doesn't work for individuals to do individual mining is you can't get the kind of electrical costs, the energy costs that these public miners can get, right? So if you're just plugging into your grid, like your city grid, you're paying way more for your energy than these public miners are paying, and so the chance of you actually being profitable running a miner, I think, are very, very low. Which is why I think most people are kind of going over to the lottery ticket mode. Like you can kind of run it. You're probably going to lose a little bit of money, but maybe you'll happen to get the lucky hash and get the guess and get the and win the prize at like a lottery ticket. But in general, it's not an economic model that's worth doing. Personally, that's my take on it. Let me see here. Okay. Scale Bar asks, question for Mike: are 99-point Napa cabs considered value or Schmidt coins? Also, when is he going to join us over here on Noster? Do you have an opinion on 99-point Napa?
Yeah, I like Scale Bar. I actually rarely recognize the names because you know how it is. You get up in the hundreds of thousands of followers. I think I have 191 now. But I Scale Bar comments a lot. And Scale Bar, I've never even considered blocking because he's not nasty, right? He's not a negative person. Like the people who are just persistently negative and just like never have anything positive to say. Like some people like are okay with that and allow it, but I don't have time to read those comments. So at some point after someone does it like a few dozen times, they just get blocked because it's mostly time management for me. Like it doesn't bother. You can say whatever you want. You can call me an idiot. I don't care. Just if you do it over and over and over again 17 times, like I'm just not going to read the comment. But Scale Bar is not one of those people, and so he must be referencing my wine post. I have been getting much deeper into the big Napa cabs, like the really complex, the ones that are big fruit, like really well produced, small batch in some cases, like the Screaming Eagles. It's funny, I own two Screaming Eagles. I've never opened one, right? Like they're so expensive. I haven't been able to convince myself that it's a good idea to open one yet. I'm waiting for like 120 or 150k Bitcoin maybe. We opened like a Bryant family for my son's bris that we just had a week ago. Like last night at dinner, I opened some Colgan and some Schrader. But look, these 98, 99, like these very perfect, like nearly perfect wines that are like perfectly structured, balanced, the acids, the tannins. alcohol, everything's in perfect symphony, and it's perfectly structured, right? Like those wines are just a joy to drink. So for me, they're not investments at all. I buy them to share them with other people. And actually, my wife told me the other day she thinks that me buying these wines has brought our family together
Hmm.
because her brother and sister-in-law or future sister-in-law, they come over a lot more now. They spend more time with the kids. It's kind of brought us all closer. We're spending more time together every week. And yeah, you could make the excuse they're all, people are only coming over to drink the wine. But the reality is like it brings people together and then the rest happens magically. So to me, it's like just a social lubricant that if you drink the really good stuff, it just feels different than cracking a Michelob Ultra. Again, I'm long AB, so I encourage you all to go buy a case of Michelob Ultra. It's like one of the only growth areas in traditional beer, and it's a big reason why my bud is up so much year to date. But like, no, I personally don't drink that stuff. I drink Napa Cabs and like Peppy. That's pretty much all I drink now. If I'm gonna put that in my body, like it's got to be good.
I love it. I love it. I'm like a redneck beer drinker, so I don't have much to say about wine. I'll probably be supporting your stock with your Michelob, Mike.
Thank you, appreciate it.
You bet, man. I'm here to help. Hey, so we got time, I think, for one more, and a couple people asked about Jason Lowry's thesis. Did
hmm
you have you read Soft War? Do you know Jason Lowry's thesis at all?
I had it right here on my desk, but now it's actually in my bedside table because I was revisiting some of it. I got almost all the way through, and then I got pulled away. As you know, as a professional investor, it's actually really hard to read for fun.
Mm-hmm.
In part because I spend 8 hours a day reading for work.
Yep.
There's so many because I cover so many sectors too, right? Like I'm keeping up on alcohol, I'm keeping up on biotech, I'm keeping up on telecom, I'm keeping up on Bitcoin, and just staying on top of like my opportunity set in investing requires me mostly to avoid like personal reading. So I view his book as a seminal work, right? Like obviously, I think you're mentioned in the credits at the beginning. I'm definitely mentioned in the
I don't
like
think I
if
am.
you open to the first page in the first edition, he like thanks a bunch of people. I took him out to steak in
Hmm.
Boston. We went to Ruth Chris. He and we had a great dinner and great conversation. A lot of off the record stuff, like stuff that he wouldn't share publicly, but because we're friends, he was able to share and vice versa. I love him personally. I think he has really good intentions. Did not understand the pushback. I think when someone has an interesting idea like this, you either say you like it or you agree with it or you don't, but you don't attack the person
Mm-hmm.
behind it. Look, my personal view is like I learned a lot from reading the parts of his book that I really got into. It changed the way I think about violence and warfare and national defense more so than it changed my view of Bitcoin, if I'm candid, right? And it changed my view about personal security. It kind of gave me more of a push to get more into guns, for example, right, and home security and things that I otherwise probably would have put on the back burner because I'm too busy investing. Everybody takes what they want from these things. I think, like again, for me, it's less about like is his thesis perfectly correct in every aspect. I don't know. Did I get a lot out of reading the book? Absolutely. Do I get a lot out of my relationship and friendship with Jason? Absolutely. That's kind of where I'd leave it.
Love it. Love it. And a final bonus question for me. Do you think beer is in a terminal decline with the new upcoming generations? Are they turning to, are they smoking pot instead of enjoying a beer? Are they moving to wine? And I ask you because you have a lot of value-based investments, and a lot of
Mm-hmm.
those value investments are alcohol companies. So, what's your
Yeah,
take on that?
so young people are drinking less. Part of that is because they have no money, and part of it is for health reasons. Like people don't want to be hungover. So what's happened is actually they're still drinking. They're just drinking on fewer occasions, and when they do, they want to drink something nicer. So it's a real premiumization trend that's happening. So no, I don't think alcohol is going away. Like for anyone who's ever had a beer versus smoked pot, it's a very different experience. Like you don't want to smoke pot and then go to a social event with a lot of people, right? And like you're just not going to be as productive. You're not going to get as many deals done if you're a pot smoker versus somebody who drinks cocktails. Like if I sit in a room with Pappy, I'm going to close more deals than if I smoke a huge joint. Like let's just be honest about that. Young people aren't stupid. They'll figure that out. They may in the short term think that they're getting ahead faster by not being hungover. But to actually make money in the real world, you need to get out, shake hands, meet people, be social. And I think alcohol is a far better, again, none of these things are necessarily healthy for you. Even in small doses, both of those things can give you cancer. If you smoke marijuana or you drink even a single glass of alcohol, the data is clear. So if you're doing it, you better have a reason or at least enjoy it enough. And so, like, but for me, for my money, I still think alcohol is a great bet. And again, at the current valuations, you're not taking a lot of risk. You're only betting that like long term trends will fall at a slower rate, and that pricing will stay solid with good brands. So like where do you get that in whiskey, in beer, right? Like people who drink Coors love Coors. People who drink Michelob Ultra love Michelob Ultra. People who drink Johnny Walker, they love Johnny Walker. And so those brands are much more powerful than the brands in wine, where a lot of people who buy wine, they just go to the supermarket and they grab whatever bottle is $24 off of the Merlot section or off the Cabernet section. Whereas a beer drinker, if you don't have their beer, they won't drink beer. They might move to whiskey. And if you don't have the whiskey they want, they might move to beer. But in wine, like people will switch over. So the wine business is actually quite challenged. One of the reasons why I like it right now for me personally is like the very high end is still firm, pretty firm, but it's cheaper than it was 2, 3 years ago. During the pandemic, Pappy bottles, for example, were really expensive. Like $2,500 to 3,000 sometimes for a Pappy 15. Now I can get it for 1,600, no problem, right? Same thing with Napa cabs. Like the Screaming Eagles, the pricing has stayed pretty firm, but it's fallen off a little bit. But the wine industry broadly, like everything below that top tier, has been absolutely decimated. The demand has dropped off quite a bit. But the brand side, right? So like Brown Forman is a good example. They own Jack Daniels. Like Jack Daniels drinkers don't quit Jack Daniels, right? They love Jack Daniels, and so like that stock bottomed out at 30 a week or so ago, and it's already bounced 10%. Got down to a valuation you rarely see with a company of that quality. Diageo owns like $20 billion brands or $15 billion brands, including Don Julio, Guinness, right? Johnny Walker, Smirnoff, the number one vodka in the world. They're number one or number two in almost every category. Captain Morgan. These are brands again that like you may say young people don't drink as much, but like those brands aren't going away. And when people do drink, they're going to drink those brands. So I think like you're safe with the big global producers, AB, Diageo. They have the best brand power. They have the best distribution. They have the best pricing power. And they're trading at such a low valuation that if they even grow EBITDA 3 or 4%, you could see a re-rating. But they're not. AB is going to grow probably between 6 and 8, but for a decade from here, starting at like a 14 multiple, which is where it got to like 13, 14 in December, early January, right? And so I was buying it all the way down, all the way down, all the way down. Then it bounced, and it's so quick the way it moved up. A lot of the movement happened like pre-market every day. So like if you were waiting for like some obvious opportunity to buy it, like you blinked and it went from 46 to 60. It's trading at 60 now. So anyway, like those I love those types of investments though, because I know that company better than the vast majority of the market. I've been reading a daily newsletter on alcohol for almost 10 years now, written by the CEO of Sazerac,
Hmm.
Buffalo Trace, Mark Brown. So he sends it out every morning to like a small distribution list of people who follow the industry. And so I've read like every research note on AB for the past 10 years. Right. And so I didn't buy it, didn't buy it, didn't buy it at 100, 110, didn't buy it all the way down as the multiple was compressing, didn't buy it. And then in November, December of last year, for the first time, I finally was like, okay, now it's in my value window. So I study something for a long time. And then when it gets in that window, I jump on it. And I think even at 60 right now, it's one of the safest stocks in the market. It'll be the stock that goes up the next time. And you saw that this week, right? Like when everything was falling, AB was up like every day when the Nasdaq's down. I bought it for that reason. It was like the stock that got so cheap in the right sector that's somewhat recession proof. It'll go up when everything else is going down, and you need to have that kind of ballast in your portfolio long run if you want to sleep well at night.
That's awesome. What a great place to end. Mike, you're just a fountain of information. Your brain is encyclopedic, unlike mine. I forget every little detail and you
You're
remember.
also way too humble.
Not at all. But I really appreciate you, brother. I appreciate you coming on the show, answering questions. Thank you for all that you do. And hopefully we can do this again. I'd love to do it on like kind of a semi-regular basis with you, just to pick your brain, because I love the way you think, and you have a lot to offer. So thanks for coming on the show today.
All right. Thanks, buddy. Good to
Take it
see you.
easy. And hang on for just a couple seconds. It has to finish uploading. And it looks like it just did.